I think a lot of us in South Africa followed the story, but we're still asking the question, what happened in Greece?
Well, I think it's just due to, possibly three factors contributing to this problem. The first being definitely not concentrating on the income side of things. Greece has a history of massive tax evasion. The Greek populace, I think, from a culture of non-tax payment and tax evasion has been a problem of late. I think secondly, we need some kind of labour market reform within the economy. I think 30% of the workforce within Greece actually works for the public sector, which is that's a high proportion, Not just that, public sector pay as well as, our pension benefits within the economy make up possibly 75% of the wage bill. Thirdly, I think they really need to get a handle on corruption. There's been a lot of corruption within departments and within government areas. So I think it's been years coming.
But adding to this bloated fiscus, where the state is spending so much on wages, on pensions, and the like, and not getting enough tax revenue, is the history of Greece, where apparently they come from a system prior to joining the Eurozone, where they paid very high interest on debt, so people weren't borrowing. But once they joined the euro and the collective debt levels or interest rate levels set by the ECB were much lower, it created a situation of unbridled spending, which they can't curb right now. Has there been a huge adjustment issue in terms of them joining the euro?
I think just, if you just look at Western economies as a whole, I think this whole debt spiral was the issue, and this is why we have the problems we have at the moment. I think, from a massive adjustment point of view, yes, there definitely was a culture shock moving to lower interest rates, but I think that was a function that we all had to get used to, and Greece itself has just fallen into that trap, unfortunately.
Okay, so what we know right now is there's a bailout package of about 110 billion euros. A significant proportion of that will be funded by the German government and the IMF. The Germans still need to ratify it in the parliament, and we're seeing Chancellor Angela Merkel motivating very strongly for the Germans to understand the need to do this. But there is a reticence from other EU member states, and the smaller ones are set to contribute on a pro rata basis. How's it all going to work?
Well, I think from, specifically Germany's in for the tune of about 22 billion euros. Just concentrating on Germany specifically, this needs to be ratified by both houses of parliament on Friday. Bear in mind, on Sunday, there are regional elections in Germany. And, Angela Merkel supporting this bailout package, well over 55% of the German population do not approve of this bailout package. Secondly, you've got Holland and you've got Ireland that also need to get parliamentary approval for these funds. Can Ireland even afford it, in the state that they're in at the moment? So, yes,
So next week we might actually be talking about revised figures.
Well, I don't think revised figures. I do think that the Eurozone needs to finalise this problem, and I think they need to finalise this package and get approval where they can.
What does this mean for the currency, the euro, and its trading parity with the US dollars? It's been in the region of 1.3 lately.
I think it's going to come under further pressure based on this. I think depending on what happens, definitely the bailout package must get approved, but for some unthinkable reason there is a restructuring of debt. It's an even worse situation for the Eurozone. I do think just based on these kind of structural and debt problems that the Eurozone now face, money is going to be reallocated to essentially non-productive assets at the moment, if you think about it. So we almost need the bailout package to be approved, but even though it is approved, you'll find going forward that this massive debt will be a lag on economic growth.
All right, let's bring Chris into the conversation here. What does restructuring the Greek economy entail? The austerity measures being proposed by the IMF, you've got to have tax reform, you've got to have labour market reform, you've got to look at and reversion the pension fund industry in Greece, you've got to move up the retirement age, because apparently Greeks go on retirement quite early on. And the Greeks are just proposing increasing VAT, which would just make consumer goods very expensive and might create a situation of inflation in the country.
Ultimately, there's going to be a lot of fiscal pain, okay? And any government that can manage to distribute that fiscal pain throughout the electorate is going to be successful. But that, as you just described, could be a monumental task, because you're talking about a paradigm shift in the way people actually do things in Greece. And it may not be confined to Greece. I mean, this is a developed world malaise. I mean, for example, if the Netherlands and Germany were to apply now to join the Eurozone, they wouldn't be allowed in because the budget deficits are over the 3%. Countries around the world have been exceeding their expenditure, their income by expenditure for so long. Greece is a particularly acute one, and I think it's going to test the ability of this government to actually get these measures through, and it's going to be incredibly unpopular, as they will be in the UK. I mean, what's his name? Mervyn King said last week that whoever takes over in Britain may have a very short tenure, because what's going to have to be applied will be so incredibly unpopular.
There's a sea change that we're talking about here, and this is the mentality of the Greeks as well. I mean, we've heard of the endemic corruption, the propensity of tax evasion in the country, and you know, Eleni, who's followed the story very, very much, said I should say to you, Greeks get 13th, 14th and 15th checks as well. So this is changing a whole culture in how the system works.
Yeah, different mindset. That's all going. You may well see actual reductions in salaries. No, it's, I think, as has been highlighted in the UK election campaign, politicians are very, very reticent to spell out in fine detail just how bad it's going to be. We're talking huge figures here. You know, to bring a budget deficit down from 13 or 14% to 3% over a 4-year period is an incredibly difficult task. My own opinion is that I think it'll probably take 10 years.
Okay, Jacques, let's continue on this one. The big conversation post the recession is what's going to happen to the interest rate cycles, especially in the developed economies. Would the situation force the hand of the ECB to start thinking about hiking interest rates?
I don't think in the short term, definitely not. I don't think any developed economy at the moment can take higher rates. I think the one aspect that does bother me, though, as we can see, is that there are these fixed income market vigilantes, you know, which are running around pushing bond rates higher, as we saw with Greece. You know, investors are demanding greater returns for the risk they are taking by providing cash to debt-strapped economies. You know, I think going forward, yes, in the short term, definitely rates will remain low, and I think governments are going to try their utmost to keep them low. The big thing here is that we actually see in the Eurozone trying to create some kind of stability to ensure that these vigilantes do not force the market against them on the bond market.
Just talking about these vigilantes, I like that terminology. The Greek bond matures on the 19th of May, and that adds additional pressure on Greece to find money ASAP. How are the broader forces going to influence the payout of that bond and the kind of money that Greece needs to just keep itself going?
I think the first payment, 8.9 billion euros or dollars, I think probably euros, on the 19th. So, you know, they have to make sure that money is in the pot. Otherwise, you're going to have what the rating agencies delicately refer to as being a restructuring. What they mean is a default. They're not going to, can't pay, won't pay. And that would throw the markets into absolute turmoil. So it's a relatively short window in which they've got to get this funding in place and ready to say, here you go, lads, off we go. It's here's the start of the repayment process.
Just very briefly and finally, Africa's got a history of IMF-sponsored structural adjustment programs. Fortunately, we're in a growth period, prolonged and protracted growth, so we're not seeing a lot of IMF intervention at that level. But what lessons can we learn from Greece?
Well, I think it's looking at the three fundamentals once again: income, labour market reform, as well as getting a handle on corruption. You know, from an income perspective, I think African countries really need to concentrate on just creating an environment, you know, for companies to prosper, for individuals to prosper, and also reinvesting cash in infrastructure going forward, you know, to try and take advantage of the tax benefits for government on the next economic boom.